All right, folks, good morning. Good morning. Wake it up. The Blacksmith Podcast is live again today, and we have a lot of stuff to cover. Over here, we Forge Men. This is a safe space for you. But Saturdays, we are going to do financial topics. If you've been following for any length of time, you know Saturdays is our Discord lives. Now, at the end of this live, I'm going to edit and upload it to the Discord playlist on the Blacksmith Podcast, so you will be able to see it there. In other news, I think I found a vendor for these T-shirts here, and so I think I should be able to get them up on. It's just my logo, the Blacksmith Podcast, and my sister-in-law made me a nice logo on the front. This one right here that you can barely see because of the camera. But I think I found a vendor for the shirt, so it may be up on Shopify in about a week. So I'll put the link maybe in the bio or somewhere on the channel where you can find it and patronize if you would like. All right, so I think my sound got fixed. Anywho, let's get to it. Now, we got a couple of things to cover today. One of the things we're going to cover is market news, right? So if you have been cognizant for any length of time in this past, maybe since January timeframe, the market was booming. It went up extraordinarily after the election, and then it started plummeting. And the reason for that was the current president mentioned tariffs that he was going to put on other countries. Now, there were already tariffs on countries. They just weren't as high as the countries were charging us. And we went over a full list of countries that he was going to charge tariffs to. But in a nutshell, and if you want to know all about that, it's in a couple discords back, and I think it says all about tariffs part 1, right? But we're not going to go over that today. What we're going to talk about is the stock market's epic return. And I don't just talk about this stuff. I do this stuff in real life. So I'm going to show you my Robinhood portfolio. All right. So let me see if y'all can see what I'm saying. You can. All right. Look, see, in the past week, no joke. That's a 37, almost 38% increase, 13 grand. But you got to think this dropped precipitously. I'm still down from what I started the year on. But that's not a bad bounce back. In fact, that's an epic bounce back. Bounce backs don't happen that fast normally, right? So that tells you if the market can jump back up that quickly, that tells you its normal level was way above that in the first place. Right. There's a level that the stock market sits at, right, and is normal. And then there's news that can come out to super inflate the market, right? And then after a while, investors will take their money out and things will calm down and it'll go back down. And so people are like, oh, I lost money because they invested up here. You didn't invest at the normal level of the market. You invested when news came out and inflated things, right? So I think now tariff news comes out at the normal level of the market and it super deflates everything, right? So it ran back up to the normal level it's supposed to be. It's still not corrected where it should be, but market in general versus individual stocks, that's different, right? And so an individual stock, you have to look at, well, let's just do that. Over here, the TBP's MVP be right, HOOD, right? I just made that up on the spot, so I got bars, sort of. All right, so Robinhood Markets is the MVP stock that I always talk about over here. This is my MVP stock. And this is going to lead into another subject if you're looking right here. Hold on, let me see. Y'all can see what I'm seeing. I always have to check because it goes blank on Discord side. All right, so this is the second subject we're going to touch, but let's scroll down here. All right, so you can see right here the 52-week low for Hood, HOOD, is $13.98, right? And the 52-week high is $66.91, right? Right now, it's at 49.53. So I would say it's a little more halfway back to the high, right? It's a little more than halfway back to the high. And so I would say this. So it bounced back $8 this week, 20%. Let's go for the 3-monther right here. This is what I want. This is the data. See right here, March 10th, this stock was down to 35.63. And that's where if you wanted to invest a pool of money, you should have invested right there. And then if you go a little further, it's down to 34.51, and I think this one's a little lower, 34.17. This stock was on a 29% sale. And that's how we got to start looking at the stock market, right? We have to use financially literate vision, right? We can't take what the dude on the corner said because he never even tried to do anything with his life or with investing. We can't take what somebody who didn't know what the heck they were talking about told you they lost $5,000, and you're like, ooh, $5,000, I'm never gonna touch that, right? Well, they do it correctly, right? So this stock was on a 29% sale. Let's say you had buying power and you had $1,000 sitting there. Well, that would have been time to strike right there. 29% down from its 52-week high. That would have been time to strike. Now, it's not too late because you can always do, and I'm getting ahead of myself because I didn't actually plan to talk about this until later on. And I'm going to go back to the tariffs. You can always amend your investing ignorance. And I mean ignorant because or naivete, probably be the best way to say that. What you just plain didn't know, right? You can always correct that by doing what's called DCA or dollar cost averaging, right? And somebody in the chat said the other day that that's what they do with this stock. What is dollar cost averaging? I'm getting ahead of myself, but we're just going to take the show out of the order I had planned to take it in. I was told this better be a good one because people need to make some money. Well, let's get you there. All right, so dollar cost averaging, or DCA, I didn't make that up. I got bars, though, financial bars. Dollar cost averaging is an investment strategy where you invest a fixed dollar amount at regular intervals, regardless of the price of the investment. This means you buy more shares when the price is low and fewer shares when the price is high, aiming to reduce the average cost per share over time and mitigate the impact of market volatility. Now let's clean that up. Let's give you the Cliff Notes version. Basically, what it's saying is if anybody has an IRA, an individual retirement fund, otherwise known as an IRA, right? You usually have to pick traditional or non-traditional. We're going to break this down real quick. I'm not going to look it up. It takes too much time. I already know this stuff. So if you have your phones and you want to look it up or your computers, you do so, right? An individual retirement account comes in many forms. It could be a thrift savings plan or TSP. It could be one of the, probably the most well-known one is a 401k. You have 403bs. They're all individual retirement accounts or IRAs because when you start one, you always get asked the question. You have to answer this because it won't know how to invest your money until you do. Traditional, non-traditional. Let me explain. Traditional, all it means is that it doesn't tax a dollar when you put it in there. If you say, I want 10% of my money per month to go to it, and let's say you earn $5,000 per month gross, it is going to put an untaxed $500 into your account. Now, non-traditional, let's say you earn $5,000 a month and you say, I want 10% going to it. It's going to not take the 10% from your gross, it's going to take it from your net. So let's say out of $5,000, your take home pay or what gets deposited is $3,800 a month. It'll take 10% of the 3,800 and you'll invest 380. Now, pros and cons. This one will accrue more interest over time faster because you're investing more money. This one will accrue it slower. However, a big con to this one is that if you're 20 years old and you plan to retire at 65, the tax rate may be way higher when you go to retire. So when you pull this out at 59 and a half without a penalty, right? You can pull it out at 59 and a half without an early withdrawal penalty. If you, let's just so you know, that I guess that one was just a bit of knowledge. Let's say you pull it out when you're 65. It gets hit with all the tax of the current tax rate, not when you invested it, the current tax rate. This one, when you pull it out, is cash money yours. It's already been taxed. So what you see in your portfolio with this one, the traditional IRA, is got to get taxed first. What you see in your portfolio with a Roth IRA or non-traditional is your money. We got that? Cool. Moving on. All right. So dollar cost averaging works the same way as you investing into an IRA. If you have one or retirement plan, right, you know that you set up 5, 10, 15%, 3%, whatever, and it goes in there and it compounds all that interest over time. Now, if you're not familiar with what I'm talking about, these Discords, I have pulled up that IRA and retirement calculator many a time and gone over how the interest compounds. Go look at the earlier videos. Now, for the ones who are caught up to speed, dollar cost averaging works much the same way. In fact, I'll show you how this does work. Now, because somebody in the chat said that they are dollar cost averaging into this champion stock over here, the MVP of TBP is HOOD, I'm going to do the same thing. Because this is not one that I was dollar cost averaging into. I was just taking lump sums of money and putting into it. But let me show you what I'm talking about. No, let me go. Which one am I dollar cost averaging into? ORC, Orchid Island Capital, right? And it shows you right here, recurring investment, $15. I have that one on a recurring investment every month. Now, why do I do that? Because Orchid Island Capital is only $7.30. So if I invest $15 a month, then I think it's a week, actually. Yeah, it's a weekly buy. Sorry. So most months have 4 weeks in it, so we'll take $60. But on a weekly basis, I'm basically buying 2 shares, right? 2 shares point something. And so 2 shares per week is going to be about 8 a month. But realistically, the math doesn't shake out as well as if you just go. I need my calculator app. Somebody's not muted. I heard that. All right. So basically what you want to do is.
You're not showing us your screen.
Oh! You can't. Can you see it now?
No, we can see you.
Okay, hold on. Let me. Thank you. I appreciate that. H to the Izzo. No, I'm just kidding.
I can see the calculator.
You can?
Yeah. You have to hit
Well, it's on Google. It's a Google calculator.
Yeah, once you hit watch screen, so you'll see his picture up in the top left corner for me. There's a watch.
Look, my chat is undefeated. Can you see it now? Can everybody see it? It's showing me that it's showing y'all, so I don't know. Okay.
That was it.
I can see the calculator.
That was it.
Okay, cool. All right, let's get it. Appreciate it. All right. So what we're going to do is we're going to take $15 and instead of times four, because some months have 5 weeks in them, I think about every quarter you're going to hit a month that has 5 weeks. So if you do 4 weeks per month, that math isn't going to add up, right? So you have to do 52 because there are 52 weeks in a year, period. So that's going to be $780 a year, right? And why that's important, you can see up here. If you look at the top left of my screen, it says ORC 7.30. That's how much money it is currently trading at, right? So now you're going to do that 780 divided by 7.3, $7.30. And it's telling you it's going to buy you in a year, in 52 weeks, 106 shares. That is how you dollar cost average. The thing is, though, that stock will not always be $7.30. But sometimes it might be $8, sometimes it might drop down to $6.80. You're getting the average price of the year. So let's say the average cost of this stock in 1 year was $7.30. When you, at the end of 52 weeks, when you've invested your 780, it's going to show your average that you have 106.84 shares at 730. That's what it's going to show. If that's the average cost of the stock in 52 weeks, that's what that means. So that's how you dollar cost average. Now, the reason I pick ORC, obviously, y'all know I'm a big REIT guy, right? I'm a big dividend stock guy. So you multiply those shares times 0.12 because they pay 12 cents per share per month, and you get 1282. So that's how much at the end of 52 weeks you're going to be earning, I guess, in December. At the end of December for the new year, you'll be recurring at $12.82. And all of that over the years is going to compound into something like this. Let me see. Y'all can see what I'm seeing. Okay. So 7164 is what I'm getting from Orchid Island Capital per month right now. Now, we got big plans. In 10, 15 years, when y'all are still watching these lives, imagine 2 zeros at the end of this, because that's where I'm going with this, right? I want to be earning like 4, 5, 6 grand a month from just the dividends. Now, imagine that you have an IRA that's compounding your money from your job over decades, and then you yourself are investing in something where if you really needed to, right? Let's say your mortgage was $2,500 and you're earning 4 grand a year off of dividends. You can actually loan yourself the money because you can pause the investment, not let this reinvest, take 2,500 because you needed it because of an emergency, and then reinvest the other 1,500. That way you never drain the pool. So you reinvest the 1,500, and if it's still $7.30, look at all the shares that you're going to buy with that, and you'll never drain it. So you can be your own lender. You don't have to ask auntie, nene, and them, grandma, brother. You don't have to ask your cousin. You don't have to call up your 17th cousin twice removed on your dad's side that you never seen in 15 years. You don't have to do that. You can be your own lender. So we have big plans over here on TBP, and I'm showing y'all how to get there, right? Anyway, so that's that, right? That's how you dollar cost average, and this is what it looks like. See, my average cost right here is $8.06. So I'm actually down in equity 9%, $462, which is not a big deal because I plan on keeping this stock forever, ever. All right, so, but I will. There was news a couple weeks back. I think it's probably a month ago. They Robinhood, HOOD, the platform I trade on, they delisted Earn. Not, that's probably the wrong word to use. It's not delisted. You can still look it up on Robinhood. You just can't trade in it anymore. I don't know what the problem was. However, as you can see, I'm down 9% on this one as well, $618. My average cost is 621, but earn actually, where we at? Earn is paying me 82.45 a month. It's actually the REIT I have that's paying the most. But what I did today, if you didn't catch it, I queued up selling it when the market opens. So Monday, since we're on Pacific Standard Time, Monday at 6:30 a.m., it's going to sell, and it's worth $5,700, almost $5,800. And now you may ask yourself, why are you selling it if it's bringing you that amount of money? Well, I love this one. This was one of the first REITs I found. It pays 17% on the dividend. Why am I selling it? I'm selling it because look, you got to change with the times. You can't bring old solutions to deal with new problems. They won't let you buy this REIT anymore on Robinhood. Robinhood is my main trading platform. Thus, would it still have some value to me? Yes, because I have over 1,000 shares. The problem is that when the dividends came out, I got a message that it did not reinvest the dividends. It put it into buying power because you can no longer buy on Robinhood. I thought I could circumnavigate the system and let the dividends just keep piling up over time, but not being able to buy. So I had a $7 recurring buy on this one as well. See, you don't have to put much at one time. You can just put, enough to cover one share, right? So I had a $7 recurring weekly buy. It would not buy it. It said it was going to be failed because you can't buy it anymore. So I was like, okay, well, I'll just let the dividends compile. The dividends won't even compile anymore because it would then buy more shares at that price, right? It won't let you buy it at all. So now it has no more value to me because I don't want to take the 82 bucks, that's chump change, I don't want to take that as income every month or let it go to my buying power because it's just sitting there not doing anything for me. I need it to be compounding. So what is it? 578206. So let's go to the calculator. 5782.06. I think I got that right. I think I have it right. All right. So what am I going to spend it on? Well, y'all might know where I'm going with this. If I can't get dividends from Earn, and that was income that was making me dividends, we're going to go to our champion here. Well, let me see. ARR. ARR is a little more expensive, but 15.99, even this one is down. The dividend percent right now is 18, but it's more expensive. So I'm gonna let me stop. Just go to it. Here we go. I know what I'm gonna do with it already. It's gonna go into Orchid Island Capital because it's only $7.30. And if let's say it opens up and it's down to $7, I'm actually going to be able to buy more shares, right? So what I'm going to do is divide that 578206 by 7.3. That's going to bring 792 more shares times 0.12 is going to be $95. Now, remember, Earn was only returning me like $82. But this one in my portfolio I showed you gives more bang for your buck. So it's actually going to give me $13 more a month than what I was earning. But I'll be here all week. No, I won't. I'll be here once a week. All right. So that's actually going to bring me more money than Earn was bringing me per month. Now, if you add this on to what it's already bringing, 71.64. I'm going to have a total of $166 a month just from one stock. All right. And then ARR, let's check on that one. Because over here, I don't believe in just telling you. I believe in actually showing you what I'm doing. A lot of times we follow the wrong people. There's a lot of gurus on the internet in the fitness community, right, that want to make videos and show people how to work out. And sometimes you'll watch what they're doing. If you've been working out for any length of time or can put the science behind it, you're like, that's totally a wrong way to lift that. But a lot of people will follow them because in the fitness community, their body is their marketing tool, right? So if you're a fat dude trying to show people how to work out, most people aren't going to watch it, right? But if you're this ripped, pumped, big dude, people are more likely to follow you. However, you may not even know what the heck you're doing. You may have bumbled and stumbled your way for 15 or 10 or 8 years into being that big, but done all kinds of joint damage, right? Well, I believe in showing you as the process, the building up process. If that guy started out as a skinny guy, and then 8 years later he started making videos as he was skinny and then showed you the build up to where he is today, that's somebody you probably could follow, right? So I believe the journey is important. So Armor Residential REIT, bam, there's 97.40 a month. So this is working. If y'all have been following me for a while, you know that's more dividends than what I started out with when I was making these videos. So that's $264.08 a month. Now we multiply that by a year. So there's almost $3,200 of income that you could get in a year, right? That's just dividends, right? It's not income unless you don't allow it to reinvest and you actually pull it out of your buying power. But you will get taxed on those dividends, right? So I don't plan on taking that out anytime soon. But this is a way to actually save your money. So think about it like this. I'm way off of where I was going to go, but I'm going to get there in just a second. If your parents taught you work a great job for a couple decades, retire, get that pension, get Social Security, and live a good life, that's an old solution to a new problem. Now I'm going to show you, you're still saving a lot more money than you would by investing your money. Because if you're investing into something like ARR, you're putting money into it, but look, the dividend yield is 18%. So it's giving you a kickback of what you're investing. So if you invested $100 in the ARR every month, let's say, you're going to get an 18% return on your $100. So that'd be $18, if that makes sense to you, right? And it's for the year, actually. So it'd be like you invested $1,000 because the dividend percentages is annual. So if you invested $1,000 in the ARR in the first year, well, at the end of the year, you'd be receiving $180 as a kickback. That's the dividend yield, right? So that's what that means. So by investing money, it's actually helping you save money, but plus it up too, because you're getting a kickback. All right, moving on. Dollar cost averaging, I think we got it, but let's see. What else? All right, so market news. This one came from the chat. Let me see. There's nothing in the chat right now. If y'all have questions, comments, concerns, or anything, go ahead, chat. Y'all already know, light up this bubble right here, and y'all are looking at the other screen. But leave an actual chat message, and I'll go over it. All right, so market news. So this is the biggest one that will make or break your portfolio right now, right? Is this tariff thing, right? Again, we talked about everything tariff in another video, but I think it warrants us to just go. I almost said the wrong thing. I don't want to say that. Brush over it again really quickly. So a tariff is a tax that you put on an import or an export. A good that you're going to either export, send to another country, or send outside of your country. And an import is a good that you're paying to bring into your country, that you're receiving. So import, you're receiving; export, you're giving away or sending. It's like communication, right? And basically what was happening is that, and these are just facts, okay? I'm not Not going to, that was my speaker turning off. I'm going to turn it back on in case the chat has anything they want to say. All right. So basically, what the president said he was looking at was a list of countries that we pay tariffs to and that they pay us tariffs. And what he was saying was it was not balanced. So Vietnam was one of the countries, and I'm just going to use an example because I can't remember the actual numbers and it may take too long to look up. Vietnam was charging us like 44% on things we were importing from them. But on our exports, from what they were receiving from us, we were only charging them like 12%. So what he was doing, now we're a much richer country than Vietnam. I don't know if that's why, or if there was something else Vietnam was giving us, just not in imports or exports to balance the scale. I don't know. But what he was saying was that he was looking at our national debt, and one of the ways to bring our national debt down, right? Because we don't want to keep swiping the national credit card for things we don't have the money for. But the way to bring the debt down was to bring the tariffs on other countries up and at least make it even with what they're charging us. So when that news happened, it tanked the stock market because a lot of, let's look at a company here. It's not actually funny, but Nike. So Nike, let's just look at Nike. Over the past 5 years, have had a 34% decline. But max, and that means since its IPO, if you had it since the IPO and it's going down now, you don't care because you're at a 903% return. However, in the past, let's look at past 3 months, it's down 21%. Now, Nike is a company that got hit very hard by the tariffs. Why? You have to understand, I know a lot of people getting on social media, snotting, crying, falling over, foaming at the mouth. Look like they caught the Holy Ghost in a Baptist church, but no. And they don't understand basic economics, right? The reason why Nike got hit hard and companies like this is because if you look at a lot of their products, what does it say? Made in China, correct. 3 points. So basically what ended up happening is after the Industrial Revolution, and I'm saying after, during the Industrial Revolution in America, companies sought laborers outside of America because they said, you know what? We have labor laws here in America where I have to pay the average person, let's just flirt with it back then. Well, let's use today's standards. I know I said Industrial Revolution, but let's make it make sense today. Let's say I have to pay the average person $20 an hour. So that's 40 grand a year. Plus, I've got to pay a 15.3% payroll tax on every person's hourly wage or salary. So really, if you take, and I was driving Uber last week, Friday. I actually had to explain this to a gal I picked up from a McDonald's to drop off. $20 an hour times 40 hours times 52 weeks is 41. I just rounded it to 40 grand. I know it's about 40 grand, but let's say, okay, actual math, 41,600. Now, if you multiply this by 0.153, 15.3% tax, that's $6,364.80. Now, let's add that to 41,000, what was it, 600? They're actually paying for one person's salary or hourly wage of $20 an hour, $47,964.80 a year, right? Most people don't know that, but when you start opening LLCs, you get the S Corps and C Corps, there's a payroll tax if you end up paying a wage to someone, right? So that's one thing, right? Then you got to look at the benefit package, right? And I explained this to her too, and she was just wowed, and she was like, "Wow, you know a lot." And I was like, "Well, I research a lot. Why doesn't she know this, right?" And so the thing is, and I didn't fault her for not knowing. It was a friendly conversation, and I just taught her something, which is great. Anyway, now there's the benefits package, right? The way you get benefits through your job, let's say you pick a package that has everything you need, medical, dental, whatever, and it costs you $600 a month. That's great. That's what you pay, right? But that company went to a health insurance company and said, hey, I've got 10,000 employees and I need benefits that range from this to that. And so they say, okay, that'll be $10 million, please. And then they say, we've got the A package, that's top tier, medical and dental. We got the B, that's mid-level. And we got the C, like if you're a single person and you need the bare minimum and you don't have that many health problems and you're young, cool, get that one. But if you're A, you're older, you got a family that you're taking care of. B, maybe you're married or you maybe have one kid, this one, whatever. So they paid $10 million for everybody's benefits package. You're paying $600 a month. You know why? Because you're paying that back to the company to pay for everybody's healthcare, right? So benefits is another thing that's costly for each employee. And basically what I'm saying, the employee is actually the most expensive part of the business. And people don't understand that, right? Because other than that, now you got, so we talked about the wages. We talked about the payroll tax. We talked about benefits. Now we're going to talk about two other things that are lesser known. We're going to talk about workers' comp in case you get hurt on the job. Who do you think pays that? The company. And people do get hurt on the job. So now they're not working for your company right now because they're out for 2 or 3 months on workers' comp, and you still have to pay them a percentage of the wages they were earning. But there's no production, right? So they're losing money paying workers' comp, but this protects the worker. Now you have the fifth one people never think about, unemployment. So if they fired you not for cause, meaning you might have been a good employee or baseline employee, but they needed to cut costs, the first thing they're going to do is they're going to cut employees because look at how expensive it is for one employee. They cut you, let you go, they've got to pay you unemployment for, I think, 6 months. The company pays that. That ain't the state. That's not the federal government, right? So look at it that way. So what they did during the Industrial Revolution is said, well, let's look at a country that we do business with and let's see who doesn't have labor laws. Let's say to say how many hours you can work per day or the pay that you need, the compensation you need to work for the number of hours you're working a day. Now let's see who doesn't have a payroll tax, who doesn't make me pay benefits, who doesn't make me pay in case they get hurt on the job. You can just let them go. And it may be immoral. I'm not talking about morals. Take business ethics as a college class for a reason, folks. There's low to no morality in business. And then let's see who we would not have to pay workers' comp if we cut them, right? China didn't have any of this stuff, right? So we're making $20 an hour, but in China, let's say you could pay them $4 a day. Or you could pay them $2 an hour, right? And they're going to work 12 hours. Do you know how much you just cut your overhead? And let's say the taxes to have that building, that warehouse where they're making all of the products, stitching all the socks, stitching and folding together all the shoes and making your Under Armour or whatever else Nike owns. Do you know how much you just cut cost? That is why they went overseas. Companies went overseas and then they started, that stock ran away. And tariffs, the tax you put on, now when you go overseas, they make all your stuff over here. And now there's a tax you pay to that country for importing their product, right? So they're avoiding all kinds of taxes. Now, when you put tariffs on, you hike up the tariffs on exports, imports. Now they get taxed a lot, and they're like, oh, shoot, this is cutting the amount of income, the revenue we were bringing in. So Nike is a company that got hit really hard by that because they have all sorts of factories overseas and whatnot. And that's that's tariffs in a nutshell. That's economics, right? If you didn't know that, now you know, gentlemen. If you don't know, now you know. I fill it in with gentlemen because I refuse to say. Anyway, so as to not get canceled. Okay, so we talked about market news. Oh, let's talk about the market news because I got here and then I stopped. So this is one thing that's big right now in the news. Follow the news, folks, if you want to get wealthy from the market eventually, right? It doesn't happen overnight. I know we live in a microwave generation and we want it now. This is not a hot pocket, right? This is a long-term thing. If you want to earn money from the market, you got to pay attention to the news. So the president says he's negotiated a tariff and China said they were going to come to the table and with a settlement. China said, no, we didn't. However, the market, y'all just saw it in my portfolio, right, did recover only a lot. What was it, 30% in a week or close to it, something like that? Now, granted, understand, almost 40%. That's not the market at large. That's just what's in my portfolio, right? You have people that invested in other stuff that maybe their stuff fell off the rails from where it was that may have even recovered more than that, right? So it just depends on what you're invested in. Now, I will say this, if you're invested in ETFs, electronic transfer funds, or index funds, you would have dropped a lot less because those stocks are an amalgamation of a bunch of different companies and sectors. So like QQQ, I'm going to get to it. Hold on. Give me a second. This is important. This is vital. So QQQ, Invesco QQQ. Let me show you what I'm talking about, not just say it. Let me give you a visual here. Y'all can see what I'm seeing? Yes. Okay. Now, I said it's an amalgamation of a bunch of companies and sectors. Let's deal with the sectors first because it's right here. Sectors. I'm highlighting it so y'all don't have to run your eyes all over the screen. You can look at what I'm looking at, right? Oh, wait, hold it. Go up here. Feast your eyes right here. Look at it with your face. It has 102 holdings. That means this stock is a collection of 102 different stocks or companies. Okay. That's how many companies are in this whole stock, one share. And 50% of it is in the technology sector. What sector has moved the market needle the most in the past 5 years? Tech. 50% of the stock, almost 51%, is tech, right? Now you have 16% communications, 13% consumer, cyclical. Healthcare is in it, but very little. Energy is very little. Real estate is very little. Financial service, very little. Real estate might actually be REITs, and I'm going to tell you why I say that. Oh, and then look, here are the top 10 holdings. Apple, Microsoft, Nvidia, Amazon, Broadcom, Meta, Netflix. Stop right there. The top 7 companies in this holdings is technology. Invesco QQQ is a good one to invest in. I actually had QQQ, a couple shares of this a couple years ago, and I sold it because I was going after singular stocks or single stocks because I wanted a lot more of the equity, and it ended up panning out real well for me. But if you want a stock that's not going to shrink down as much when news comes out, you want an index fund or an ETF like this, and this will actually help hold up your portfolio. And long term, you will earn equity on it. And then you have Costco. Costco is probably, honestly, one of the biggest like consumer stocks, retail, probably one of the best in my opinion. Tesla, another tech stock. And then this is Google. So 9 out of 10 of the top companies that are in this stock is tech. Imagine that. My speaker just cut off again. All right, turn back on. All right, so the reason why I said the real estate is probably REITs is because if you look right here, the 30-day yield, QQQ pays a dividend, right? And so I'm guessing it's probably, and real estate is really low in this one, it's probably REITs, a REIT or two that they invest in. But you could go through the whole thing and see. But anyway, now what was I talking about? Now I done got lost. I said I was going to get to it. Oh, so the number one thing that's moving the needle for the market right now, and I don't mean sector, I mean this, tariff news. So if they actually came to an agreement, you will see the market recover all the way. If they have not, and China comes out and says something else like, we're never coming to an agreement with the United States, look at my face, then what's going to happen is back down goes the market. That's what's going to happen. And they have played this war where I'm scrolling so you can read it, but they have played this war back and forth where China has us at 50%, we had them at 20. Now we raise it to 50, they're like, fine, we'll raise it to 75. Now we raise it to 75. And we're just counter punching each other, right? Because one country is saying we want to be equal to you in tariffs, which is the US, and then one country is saying we want to be above you, and that would be them, right? So, wow, Curtis. I'm not going to tell y'all what I'm talking about, but Curtis, he knows. Jesus, Mary and Joseph. All right, so in the tariff situation, if you haven't caught up to where we're at, just when you watch the replay, go ahead and you can read this whole article. For the chat, if you want to, I can go ahead and throw it in there so you can read it. It looks like somebody's typing. Oh, they are typing. Okay, so I think right now he's saying that he wants to charge them like 145% or whatever. I'm going to tell you right now, that's a lot. That's a lot. But it is what it is. They're going to figure it out before long because China's like one of our biggest import or the ones that, there it is right here, a minimum of 145% this month, right? And he's trying to force them to come to the table, right? So this is what's happening, and this is why the market is rising and falling as fast as it is. And if they reach a negotiation that both sides can live with, then guess what? That will make the market settle down, all right? Now the chat is saying, all right, so be careful. The monthly candle for the SPY is bullish, but MACD and RSI on monthly chart is bearish. We may still go up, but over the next couple months, we will come down. Yeah, so that is true. Thank you, YInvest. I appreciate that. The chat is undefeated. All right. So that's this article. Now we go to PBS's article where they're saying where the stocks rally and recover. So they're saying the S&P 500 was 2.8% higher. That's good. The S&P 500, if you didn't know, top 500 market cap companies in the market. And so the market usually goes up on an average about 10% a year ever since like 19 whatever. And I mean early in the 1900s. I know I'm from the 1900s, so I don't mean it like that. I'm not old. But And it's because it follows the S&P, the top 500 market cap companies, right? So S&P 500 goes up about 10% a year, thus the market follows. All right? So that's great news if the S&P 500 is going up. All right? And what people don't really know is sometimes when all the time actually, if companies are not doing well and they're a part of this, they'll fall out of the S&P 500 and another company will take their spot. It's like it's probably the most invested thing in the stock market because IRAs get invested into this, mutual funds. When you look at your IRA, they're investing most of your money more than likely into stuff like S&P 500, right? Because it's proven to do about 10% a year, right? And so then if you add in inflation being about 3% a year, you're getting 7% growth on your money, right? You're outpacing the current dollar status quo by 7% a year, right? So that's great. I typically invest in singular stocks because I can make more than 10% a year. I can outpace the dollar myself more than that. But if you have an IRA and you're not like telling it where to go, most people don't, this is probably where they're putting your money. So that's great news. If the S&P is going up in value, then the market is recovering more than likely, right? And not to get too deep into that. All right, so now let's go over the last subject I had for us, right? The last subject I had for us is it's that time of year again, folks. Companies are about to start doing earnings calls, right? If you're not familiar with what an earning call is, it's basically where every quarter companies will call in what their revenue and all of that kind of stuff. So an earnings call is a conference call where public companies discuss their financial results for a specific period, quarter or year, right? Typically a quarter. With investors and now analysts, it typically follows the release of the company's official earnings reports. During the call, the company management explains the reported results, provides guidance for future performance and answers questions. And that's what we're going to go over right now. And I'm super excited because I get to show you guys right here before it happens. So if you remember, I think it was last quarter, 2 quarters ago, I showed y'all the top 3 questions that were asked of the CFO, Chief Financial Officer, and the CEO, Vlad Tenev, which is him, co-founder of Robinhood. This is the CFO. I don't remember his name. Let me see if it's down here. Vladimir Tenev is right here. He's the CEO. His name will be in here, but we went over it before and it was on one of these Discord videos. So right now, for the next 3 days, if you see 3 days left, you can actually go in here if you are a shareholder of HOOD, and you can ask them any question you want to. So you can see right here, 2,737 shareholders participated in this, and there have been 675 questions asked. Now, again, they won't all get asked. They're only going to answer the top 3. They don't have time to answer that many questions. And they're not going to. They have there is value in the element of surprise, but there's also value in letting your company, your investors, your shareholders know the direction of your company. So let's go to this real quick. Now, there's a couple people that I've seen in here multiple times. When I come to this every single quarter, there's a couple people that I see ask questions on the regular, and they actually ask the best questions. You can tell they're seasoned investors, and they really, really invest heavily in this company by what they're asking, and their questions get asked more than other people's. So Eric W., he asked, when will the Robinhood Gold Card be released. Excited about the perks, but have been on the wait list for almost a year now. Now, let me talk about this one. I talked about this before, but let me quickly glance over a couple of these. So, the Robinhood Gold Card is a credit card that Robinhood released. I think it was last year or 2023. And if you are trading with the Robinhood platform, but you don't have your notifications turned on, you're doing yourself a disservice, because the only reason I knew that card was coming out is because there was a notification that came out and said be one of the first 100,000 people to sign up for. And guess what? All I did was hit sign up and I was on the wait list and I got my card. I had that thing for like a year now. So if you didn't do that, if you remember like a quarter or two ago, they said that they plan to release another 100,000 this year. And so if you were on the wait list and you were like 172,000, okay, you're probably going to get yours this year. All right, next question. Customer service and being able to call a dedicated representative with any account questions or concerns is usually the biggest reason people in my circle haven't moved their money to Hood. What kind of growth and changes can we expect in the future for those services? Now, this actually is something, I don't want to discount it because it only has 25 votes. So now it has 13,000 shares, but it only has 25 votes. So this isn't a question that's going to make it into the top three. With 3 days left, if you notice the votes, people are participating. It said 2,767 people, I think. This isn't one that people care about the most, but this person cares about it the most, right? So they are right. Like, customer service is big. And a big thing is when you get transferred to somebody and you have a legitimate reason to be calling them and you need help now and you can't understand the person's accent or they don't understand what you're saying, stuff like that is a big gripe. However, I bet this is something Robinhood is taking very seriously. However, they're just not going to answer this one because it's not important enough to all of their shareholders to answer. All right, so let's move on. But the number of shares, I guarantee you they can see this because we can see this. They're probably working on this. They just won't answer it. All right, so Brandon L. says, at some point in the future, will there ever be an actual phone line for customer services and support? What he's talking about is they have one of those bot services, because I had to go through them for something. I can't remember what it was. And it's just either a bot, and if the bot can answer your question, they answer your question. If they can't, they will actually put a real person on the line and they will crack open your portfolio or your account and actually help you fix it. I had to do this before, but people like real people, but we're going to have to deal with the fact that AI is taking over. So those customer service jobs are going away, maybe slowly, but definitely surely, right? So we have to understand AI is making its debut into the world. And AI is still so early. That's actually the reason why I'm still invested in like SoundHound AI and other NVIDIA and other companies that invest in AI or actually are researching AI and furthering AI and all of that. AI, because internet is only covering like 70% of the world right now. Only about 70% of the world is using internet. And so it can't all be high speed if it's only 70%. So just imagine, we just started hearing about AI like 3 to 5 years ago. Companies have been using AI 15, 20 years. They just haven't said anything. Automated processes is AI, right? So I'm sure they're working on this one too, but they're not going to answer this. Let's scroll to something they are going to answer. I upvoted these two. You can see with the green thumbs up. So if I get this wrong, player, I'm sorry. Pankaj. This sounds like an Indian name. Pankaj K. I hope I got that right. Are there plans to issue dividends? Now, this has 1.2 thousand votes. This one might make the top 10, right? People care about the dividends. If Hood starts paying a dividend, oh, Lord have mercy. My corazon. I'm all in. Enough said, right? Enough said. It's not going to pay dividends at the rate of a REIT now, not of a real estate investment trust. It ain't going to be paying 18%. Thank you. I see the laugh emoji. But I was being serious, by the way. But here's the thing. If they pay a dividend, oh, Lord have mercy. Enough said. It won't be like a REIT. It'll be probably like 4% and below, probably 0.53%, 1%, 2%, something like that, right? So it's not going to really make a dent in your portfolio unless you have tens of thousands of shares, all right? All right, so what is Robinhood doing to accelerate credit cards and checking accounts to their gold members? Now, I upvoted this one. Look at how many shares it has, 1.1 million, and look at how many votes. People care about that. I most certainly did. When I read it, I was like, yeah, let's go. Because again, the direction of a company is probably most important. One of the most important things. Yes, this is where the company is, and this is its value, right? But where is it going? That's important because you might be king of the hill today, like Intel, and you might be at the bottom and no one speaks about you anymore tomorrow, like Intel. I don't invest in Intel. And on your leisure, Ian Dunlap, the master investor, he's always talking about Intel's rise and fall. If you look up Intel on Robinhood and look at the 5-year chart and look at the max, you'll see what he's talking about. All right, stay away from uninvestable stocks. Yes, you could make a come up on it, I guess, but I ain't doing it. I don't advise you to do it. And listen, my advice is unlicensed, but it is professional. All right, let's look at another one that has a lot of votes. Okay, look, let's look at this one. This one has 93. I didn't thumbs up this one. Robinhood is an American company. It's based in California somewhere. I can't remember exactly where. So I didn't think, and it's a trading platform. I didn't really think tariffs were going to affect this one as much. But that's what this one is. How will they affect them and how do they plan on working around this? And I think it only has the amount of shares and votes just because tariffs is a hot topic. It's actually not a bad question to ask is what I'm getting at. I just didn't upvote it because I didn't think it was that relevant to Robinhood. This person asked, can we prioritize issuing credit cards to users who hold Hood shares? So basically investors. I think that's a good question to ask. They probably won't because they had a waiting list and a sign-up list. So I didn't upvote this one. This is why you turn your notifications on. Would Robinhood consider rewarding stockholders with free gold subscription? Not a bad question to ask. I doubt it. Subscription models is where a lot of companies can bet and actually, what am I trying to say? Guesstimate their income, their revenue for the year, right? If you have 1 million people subscribe to something and it's $5 a month, you can now say, we're going to earn $5 million at the end of the year because you're on a subscription model. If they pay month by month, you don't know how much you're going to earn. So giving away that revenue, I don't think they're going to do that just because you hold Robinhood stock. There may be a discount. I doubt it. Or they may say, okay, yeah, we'll give you a free subscription. You got to hold 1,000 shares or more. If they do it, I think that's what they're going to do. All right. That's just my opinion. The TBP's opinion. All right. Let's look for another one. Let's look for a power player. Okay. This person, Ashok, if I messed it up, I'm sorry. All right. Said, Vlad, where do you see Robinhood 10 years from today? That is a nebulous question. He should be more specific. However, it's not a bad question to ask because you leave the door open by being that ambiguous for Vlad to say anything. The top three things probably is what will come to mind on the direction of the company. So that's actually not a bad question to ask either. Let's look at a couple more. But what I want y'all to get from what I'm showing you right now, this one I upvoted, so we'll go over it. What I want you, oh, this is a huge one too. Don't look at the screen. Don't look at it. Look at me. Look me in the face. Look me in the face. Don't look at the screen. I should just scroll it off. I'm going to trust you. All right, listen. Robinhood, right? The direction of the company, Vlad can actually tell you if you ask a question like that, but you should absolutely be concerned with where the company's going. I was actually trying to do a filler because I forgot what I was going to say because I was telling y'all not to look at the screen. So now let's look at the screen. I forgot. I'm getting old. I'm not old. I'm getting old. All right. So look, this is one I voted up. Nico F was somebody who got a question answered before, I remember. And I saw this one and I said, oh my God. And actually one of my buddies, he said this one to me too. He said, when will users be able to invest in private companies such as SpaceX? Now, that's uber important. You know why? Because SpaceX is a private company that has not IPO'd yet. And they're asking when it's going to IPO. It's not a part of Tesla, I don't believe. I don't think, no, it's not. It's not. I looked this up before. So let's look at SpaceX news, right? SpaceX designs, manufactures, and launches advanced rockets and spacecraft. The company was founded in 2002, right? You can't, I mean, if you're going to invest in SpaceX, I'm pretty sure you got to have, you can invest in private companies, but Robinhood is a public trading platform, right? So if they're going to allow you, I bet you a lot of people are like, waiting to hear from this. So if y'all see this, I want them to answer this. If you're in my chat, please go in here and upvote this question. I want this, share this out. This question needs to get answered. If any one of those three I wanted to see answered, maybe I should remove my upvote for the other ones. I want to see this one answered right here. But I bet I don't know, but I want to see this one answered. Because I want to invest in SpaceX, Neuralink, and Starlink before they IPO. Because if you can invest in them before they IPO, let me break this down to you, right? Before a company goes public, their shares might be like 40 cents per share, right? And then when they get their evaluation to go public, they might go public at $40 a share. Now, this is so often happens, if I come out of it, I'm going to show you in a second. Let me write this down. Max chart for hood. I'm going to show you what I'm talking about. But I didn't say it yet, but when a company IPOs, typically there's a steep climb and a precipitous fall. And the reason for that is the people who invested in that company and have the private share prices, when it goes public, they had it at 40 cents per share. When it goes to $40 and they push it up to $50, $60, they take profit. They sell all their shares. And guess what? They get that cash money and it drops the value of the stock through the floor. Robinhood at one point was trading at like $8 or $9. And I was buying it then too, because I invested at like $47. I think I bought like 3 shares and then it dropped on me and I said, oh, no, you don't. And I chased it. I was dollar cost averaging. The chat said something. Here we go. Why invest is on this. Strategene is an app where you can invest in private companies, and there's another app but can't remember. Thank you, good sir. Appreciate that. You're a gentleman and a scholar, no matter what Sanchez says about you. And she says a lot. I'm just kidding. All right, let's look for another one. So private company investing. I don't know why I'm getting so close. I can see it. This is another one I upvoted. When can we expect Robinhood banking to be available? I'm so done with SoFi. I remember what I was going to say before. but you've already looked at the screen. 2 quarters ago or a quarter ago, I cannot remember. I think it seems like such a long time ago. That's why I keep saying 2 quarters. They talked about becoming a financial institution. So they were talking about bank accounts. They were talking about personal loans. I don't think they said that one, but they were talking about even mortgages, right? So any of those questions I see on here, I upvote those because I'm waiting for the day that they become a financial institution, but I'm investing now. I'm putting what I can in there now because it's going to go to the moon. Robinhood, and I said this before, is going to become, they're on their way to becoming a one-stop shop. Think about that. If you can go into like a Chase Bank, right, and you can store your money, checking, savings account, you can get a credit card from them, right? You can get a personal loan, a vehicle loan, and you can trade stock. That's a one-stop shop. I mean, the only other thing to do is put groceries in there. You know what I'm saying? Put a tire rack in there, just put an auto shop next to it that has a door where you can walk in there like Costco or Walmart, while your car is getting a set of new tires. Then you move over to the left door, you get some groceries, and then you come back to the bank and talk to the manager and the financial advisor. I mean, it's crazy. But look, I'm not going to go through all of these stocks. We're over time right now. There's something else I was going to share with y'all. Okay, let's go over this one more. This last one. There's value in this. So, are there any plans to improve dividend tracking for equities, perhaps including historical dividends and growth rates into screeners as well? Now, if you don't know what he's talking about, I got to come out of this, but this was the last one we're going to go over. You go on here for Hood and you look through these. If you're not an investor, you might want to become one. Unlicensed but professional opinion. All right, so let's look. Hood. Let me show you what he's talking about. So he said tracking historical data for dividends, right? All right, so dividend yield is right here. There is none. Well, why didn't I just pick one that had a dividend yield? All right, let me do that. I wasn't thinking out loud. All right, so now, don't be critiquing my singing skills or lack of prowess. All right, so look, dividend yield for ORC, Orchid Island Capital, is 19.78%, right? And it's talking about price to earnings ratio, yada, 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 but it doesn't say a whole lot about the dividends. He's asking, can you add more historical data to this right here where it's talking about the key statistics? And because I'll tell you why. This is what I always have to do to answer what he just asked. See that? It's already in my search bar, right? Dividend yield, right? And what does it bring up? And again, they're looking to make this a one-stop shop. Usually it's NASDAQ that I have to click to find this out. It'll come up and it's NASDAQ. And there it is right there. Where did it go? Right here. So I usually have to click this. NASDAQ is usually the first one. And it tells you right here, dividend history. Let's go here. It's not loading. Oh, it's not available in NASDAQ. Okay, well, let's go back to New York Stock Exchange. All right, so 19.78%. It tells you right here, this is what they're talking about, the quarterly dividend amount. Now, for 19.78%, it means you have to take Orchid Island Capital trading at $7.30 and multiply it by 0.1978, and that'll tell you a number, and then multiply that by the year, and it'll give you a number. The easy way to do it is just to add this information into the key statistics data under the stock so you can just see it in one spot. So if you scroll down and it has 19.78%, but next to it, it tells you it pays a quarterly dividend of 36%, then that tells you each month, if you just divide it by 3, each month then gives you 12 cents. So that means 12 cents per share per month, or 36 cents per share every 3 months, every quarter, right? But Orchid Island Capital also pays its dividends per month. And that's the kind of stuff he's asking them to put in there. So there's great value in that question, actually. It's just not going to be one of the high arching questions I think they're going to answer. Okay, so on it being a financial topic, I think we have about expended, because we're like an hour and 20 minutes. I was going to show one more thing, but I think I closed it. If this is the history, I think this is it. No. Okay, I can't remember where I had it. There it is. Boom. All right, folks. So always be working on yourself. I'll leave you with this. Always be working on yourself. Always be working on yourself. I said it. All right. So if you already have a 9 to 5, if you are between jobs, if you're staying at home, whatever your case is, whatever your situation is, always be working on yourself and looking to plus up your skill sets, right? Intuit. Intuit is a site that deals with financial literacy and has a myriad of things that it offers. But among those things are courses that it offers. And guess what? They are free 99. So I'm going to show you. So tax preparation, it'll show you how to prepare taxes. Tax planning strategies, tax level 2, tax level 1, QuickBooks, bookkeeping certification. So the blacksmith, just so you know, is actually enrolled in this one right here, because we have an LLC, my wife and I, and doing the books it's a nightmare to do taxes if you haven't kept up with your books all year long. So learning how to do books for our own business, and then I know she wants to learn this too. I actually caught this from her. She said she was scouring and she found this. So I'm going to share it with y'all. And so my wife found this, so I'm going to share it with y'all. But you can go and do this. And if you get certified in being a bookkeeper, you might be able to bookkeep for other people's companies. You could get hired. Oh, that's another thing. If you sign up for this class, you can say you're signing up to like hone your own skills, or the other option, something like that. The other option is you might be looking for employment opportunities. So Intuit, if you finish one of their classes, will actually help you with employment, either with them or with somebody that's chained to them. Test me and see if I'm telling the truth. But my point is, they offer free courses: equity compensation, crypto tax, business tax. If you want to become financially literate and add some hard skills to your skill set, then Intuit is a good way to do it. No, I'm not paid yet. I'm not an affiliate marketer. Look, I'm knocking on Robinhood's door to get an affiliate link to where if anybody signs up with Robinhood, I can earn money from that. Look, the blacksmith works hard, and I use a lot of their products all the time. I show y'all Robinhood portfolio all the time. I'm trying to become an affiliate marketer. Y'all pray for me. All right, folks, the forge is going to go cold. That's all I got for you today. Sorry we have to part, but it's Saturday, and I'm about to go and enjoy my day even more so than now. I enjoy doing these. So, again, every Saturday, 10 a.m., I will have something cooked up for you. Typically, I ask people who are in the chat what subjects they want me to cover. And typically, like even today, this subject came from somebody who is in my chat. So I hope y'all appreciate the information. It's totally free of charge. I love doing this. This is what I do in real life. I've been doing it for years. I just got behind the camera like a year ago and started doing it on YouTube. So I hope you have a great weekend. Love all y'all. And the Forge is going cold. See y'all next week.